In this video, I'm going to explain the Silicon Valley Bank crisis in simple terms. Subscribe this channel to get more interesting and informative videos. Let me first tell you a little bit about Silicon Valley Bank. By looking at the name, you can easily understand that this bank is located in the Silicon Valley area of California. And as you know, Silicon Valley is known for being the center of the tech industry in the United States. It is a region in Northern California primarily located in the southern part of the San Francisco Bay Area. The region is home to many of the world's largest and most influential technology companies such as Apple, Google, Facebook, and many more. Silicon Valley is also known for its startup culture where entrepreneurs and investors work together to create new and innovative businesses. This culture has spawned many successful companies and has led to the development of new industries and technologies. Now, if at all a bank exists in this region, basically in the middle of a startup culture where entrepreneurs and investors work together to create new and innovative businesses, then you can easily understand that the primary role of this bank is to help technology and innovation companies by giving financial services such as loans, accounts, and investment advice to help them grow and develop their products. Now that you have some understanding of this bank, let's try to understand how this bank went into crisis mode. If you remember, during the pandemic, that is in March 2020, the United States federal funds interest rates were almost near zero. During the period of near zero interest rates, that is in March 2020, the Silicon Valley Bank invested billions of dollars in U.S. government bonds. Now, investing in government bonds is often considered a safe investment, although the returns are very low, but then it is considered a safe investment simply because the interest rate that you get from investing in government bonds is fixed. They primarily invest in government bonds and securities. And if you see, they are usually low to moderate risk mutual funds, and the yearly returns are also low compared to other mutual funds, and the most attractive factor is interest rate is fixed. So people find it risk-free. So in simple terms, when you invest in government bonds, you are essentially lending money to the government, and in return they pay you interest over a specific period. Now, what happened is that during the pandemic, almost everything was shut down and we were locked up at home. There was barely any economic activity going on, and almost every country's economy badly suffered. Prices of commodities were skyrocketing. It was almost a recession. So many people lost their jobs. The supply chain was hampered. As a result, prices of commodities increase. Now, as usual, any central bank during a recession, what they do is they start reducing the interest rates so that there is some money supply in the market. So in 2020, the Federal Bank of the United States, they were cutting down the interest rates, and they kept it like that till 2021 end. And then suddenly in 2022 beginning, they started increasing the interest rate aggressively. Now, as soon as the Federal Reserve started raising the interest rates to combat inflation, government bonds, which the Silicon Valley Bank had, their prices started declining. Why? Simply because the new bonds that will be issued by the government will have newly increased interest rates. Example for better understanding. Suppose you own a bond that pays 2% interest and interest rate rises to 3%. Suddenly, new bonds being issued paid 3% interest, making them more attractive to investors. Now, in a capital market, there are buyers and sellers, basically competition, so to compete, the value of your bond must decline only. Then the new bond will be attractive as well as profitable for investors. So this is exactly what happened with Silicon Valley Bank. They invested billions of dollars in U.S. government bonds when the interest rates were near zero, and then suddenly when the U.S. Federal Reserve started increasing the interest rates, the value of the holdings held by the Silicon Valley Bank started declining. The Silicon Valley Bank, as a result last week, that is on Friday, March 10th, trading in Silicon Valley Bank shares were seized, and the bank has also given up all efforts to raise funds or find any buyer. Now the government has stepped in. The bank is practically closed, and it has been placed under Federal Deposit Insurance Corporation. They take over the control of banks' assets and operations, and the ultimate goal is to sell or liquidate the bank's assets to pay off its creditors and depositors. Conclusion. Now this is a lesson for everyone in today's digital age when almost everybody has started investing in the capital market, share market, or stock market, which is subjected to market risk. But the sole reason behind investing in the capital market is because of its potential huge return and making quick money in a short span of time. In simple words, greed. You know, greed and fear are the two main components of the financial market, and risk is the third component that makes you forget fear and greed. All these new age financial advisors motivate you by using the word risk in such a positive manner, but then this is a lesson for everyone in today's digital age. Every bank where we keep a hard-earned money, they invest in financial markets, and now when we see a bank like Silicon Valley Bank run like this, it can cause even a healthy bank to go bankrupt. So anyhow, this is the entire story of Silicon Valley Bank. I hope you found this video informative. Thank you for watching it.